Hello, welcome to today's video. The topic of today's discussion is factoring. So what is factoring? Factoring is a method in which the company can convert their bills receivables into cash. So this facility is available to companies. So what is bills receivable? There are two kinds of sales: cash sales and credit sales. In cash sales, company will receive cash instantly at the time of contract between the seller and the buyer of the goods, whereas in credit sale, this is a facility provided by the seller of goods to increase their sale, that they provide the facility that he can sell the goods on credit, that the customer can pay the amount of the good at a later time, at a later day. So the seller will receive a note that is known as credit note or bills receivable note, which shows that the name of the seller, the name of the buyer, date and time of purchase, and date at which on which the buyer will pay the amount to the seller. So everything is specified in that note, and that note is known as bills receivable note or the credit note, which represents, or it is also known as the invoice bill, in which everything is written, that is name of the seller, name of the buyer, and date and time of purchase, what is purchased and at what time, after how many days the buyer will pay the sum to the seller. So everything is mentioned in that note. So this is known as bills receivable note. So the company's money is stuck into the credit note or bills receivable note. It is such that it is not as liquid as cash. So when company needs cash, it has to go to the bank to take loan. So sometimes it might happen that the interest on that loan is more than that increased sale. So this facility, there is a third party involved, that is known as factor. There is a facility available to a business that instead of going to bank to take loan, they can sell their invoice bill. They can give this note to a third party, which is known as factor, and in return the factor will give some advance payment of some amount of bill invoiced. Okay, so the factor will give the advance payment, and the factor in return will charge some commission or fees from the client or seller of the good. So what is factoring? Factoring is defined as a method of managing the book debts, that means your debtors, in which a business receives advances. The business is receiving their advances against the account receivable from a bank or financial institution, which is known as factor. So one can say that in factoring, the company is converting their credit sale into cash sale in no time. Okay. Next one is steps involved in factoring. There are three parties involved in factoring. First one is seller of the goods, also known as client. One party is known as buyer of the goods, and third party is factor. So there is first transaction between buyer and seller regarding the purchase of goods. So a buyer will purchase a good from the seller, and in return seller will give bills receivable note, or one can say the invoice, that is bill, which shows the amount of money that has to be taken from that person at a future time. So seller, after receiving the note, BR note, the seller will transfer this note, or one can say invoice copy, to the factor, and in return factor will give some advance payment, at the time some advance payment. Okay, so at the time of maturing the invoice copy, that is at the time that is mentioned in the invoice copy or bills receivable copy, the factor will go to buyer to collect his money. So the factor will go to buyer and buyer will pay to the factor the amount specified, total amount specified in that invoice bill. So buyer will pay the amount to factor and factor will pay the rest of the amount at a specified date, at a maturity date. So suppose earlier it is 80% is given to seller, and at a maturity date the rest 20% will be given, less the fees deducted, for for the factor. So factor will deduct its fees from the rest of the 20% at a maturity date. So the seller will get all the money excluding the fees or the commission charged by the factor. So this process is these are the steps that are involved in the process of factoring.